Tensions with Syria have the trading floor flooded with fear. From the blackjack table to the bargaining table, our cover story looks at why some casino workers are unhappy with the deal they've been dealt. Plus, the secret to get your bank to drop its fees. Ask! And the luster is gone. Why we've lost our enthusiasm for the latest, greatest smartphone rollout. First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
And good morning. On this day after Labor Day, I'm Bill Mahler in for Angela Miles. In today's First Look, traders, they're hoping today for a September reset. Good riddance, August, the worst month for equity prices in more than a year. It's the serious saber rattling from the White House that's making traders pull back. As John Kerry was speaking about what the government would do last Friday, the markets were sliding. Here's where things stand as we await the opening bell. The Dow, Nasdaq, and S&P all down for the day and the month of August. Gold opens just under $1,400 an ounce, and oil down 1% on Friday, even as supplies are strong. How you feeling, American consumer? Not whipping out the old credit card as often? Consumer sentiment from a 6-year high in July fell in August. The University of Michigan's index dropped from 85.1 to 82.1, reflecting pessimism about the future of the economy with higher interest rates and slower growth. All right, still waiting to see if there's going to be an attack on Syria. Let's talk with Chris Gersh with Altimus Capital. Chris, how would this affect traders if, and maybe some people would say when, there is an attack?
Good morning. Well, you know, what happened as far as last week is concerned, we had a lot of traders positioning themselves for that attack, and that's going to continue to happen. You see a lot of put buying as far as the S&P in the future months. Really, you know, this week is going to be all eyes on the news, but a lot of these traders have already positioned themselves for that follow through on the S&P, and no one's really having any buy orders put into the 1590 level, which is a key psychological level here on the floor. So as far as the fears are concerned, I think that traders are well positioned for if there is any action, and if not, those are going to be slowly unwound. We're not going to see a huge march up in the market this week, regardless.
Hey, Chris, we've also heard that the government doesn't want to make this a protracted. It's going to be a surgical strike, so maybe once it happens, that'll be almost a sense of relief.
It will be a sense of relief, and I think that once it does occur, I don't think that you're going to see an equity follow through, but I do think that you're going to see a immediate pullback, a filling of a lot of those orders. But I believe that a prolonged non-action is going to hurt the market even more. Quickly,
September, usually a negative month for the markets, and we have the Fed meeting, and also the spending bill has to be dealt with. What does it look like to you in the weeks ahead?
It doesn't look good if I'm a long-time holder. We are positioning ourselves a little bit more into a stronger dollar situation, but at the same time, I think gold is going to be continuing a safe haven as it hovers around that 1400 level, and you know, a area of safety once again as we go into a wartime trading session.
All right, Chris, you have a good week out there.
You too.
It's been 20 years since Indiana legalized gambling, and the money has grown each year, contributing $700 million to that state's budget just 2 years ago, more than corporate income taxes brought in. But not everyone's cashing in. Our cover story looks at casino employees locked in a labor battle involving bankruptcy. Employees at the Majestic Star Casino in Gary, Indiana, say they haven't had a raise in nearly 3 years and have been working without a contract for 10 months. Jerry Elliott, a housekeeper here for 13 years, makes $13.30 an hour.
I keep to a minimum of a budget, and I just try to pay my bills, and hopefully things don't get any worse.
On Labor Day, workers from the Majestic Star and nearby casinos gathered the support of Unite Here Local 1, which represents hotel workers and is the force behind Fight for 15 minimum wage demonstrations.
We want our contract, we want our raise, we want our health insurance. The riverboats were brought here to give us good jobs, good paying jobs, health care, and that's what we intend for them to do. We want what they promised us.
Health care and the rising health care costs for providing coverage to employees has become a harder issue for everyone to deal with in the last 10 years or so, and it's not getting any better.
The lead owner of Majestic Star is Wayzata Investment Partners, a private equity firm that took control 2 years ago as part of Majestic Star's bankruptcy reorganization. Wayzata did not respond to our request for an interview, but according to the labor union, the casino under Wayzata laid off 100 workers last year, despite an upturn in admissions and reportedly taking in more than $200 million in gross receipts, making it the 7th highest grossing out of Indiana's 12 casinos.
As companies' economic health improves, companies become a little more willing to make changes and provide raises, but not every company is like that. Not every company is doing well, so it certainly still is very adversarial in many companies.
Unite Here says the last bargaining session was in July.
The new month dawns with no signs of constructive dialogue on the debt limit. With the economy growing and the sequester cuts making budgeting more difficult, nobody's talking about compromise. Last week, Treasury Secretary Jack Lew told Congress that the government would run out of cash in mid-October. Republicans say they will not raise the debt limit unless the president accepts additional budget cuts. Lew says the president has already offered plenty of cuts and will not bargain on making more. Congress and the White House also have to come to terms on a new spending bill to keep the government running past the end of this month.
China's bank loan programs are backfiring. Banks expanded credit programs and relaxed lending rules to boost the economy. But some industries overused their credit capacity and attracted consumers with bad credit histories or no credit history at all. China Construction Bank claims that 2.33% of its loans went without payment by the end of June. That's up from 1.97% 6 months earlier.
China is showing its appetite for oil and technology. Chinese petroleum company Sinopec signed a $3 billion deal with Egyptian company Apache. Sinopec's been looking to refocus on North American onshore holdings, which it believes are more predictable and consistent in growth. But it's a bold move during a time of Middle Eastern turmoil. But it shows a confidence in the oil production market, says Price Futures Group's Phil Flynn, and it advances China's goal toward self-reliance.
Now it looks like China wants to partner with Apache because Apache is a leader in fracking technology and directional drilling. So not only does China want to take the risk of investing in Egyptian oil fields for the supply, that's only part of the answer. I think what they also want to get is access to that technology so that they can try to develop their own oil and gas fields at home.
The Sinopec-Apache deal is expected to close by the end of the year. Flynn adds that the U.S. is relying less on overseas oil production, and crude prices will not take as heavy a hit as past times of political unrest.
For the second month in a row, the unemployment picture in Europe improved. New stats show unemployment is down by 15,000, a small yet optimistic figure. The rate still hovers at 12.1%, an all-time high, however. An EU official notes the situation is still very fragile. Meanwhile, an index tracking business sentiment rose in July to a 2-year high.
November 25th, that's the date set to consider the government's lawsuit to block the merger of American Airlines and U.S. Airways. The two carriers want this resolved soon. They like that date. The Justice Department wants the trial to start next March. It's a very complex case. The government says it needs at least a half a year to prepare. But the companies say waiting that long could scuttle the merger that would create the world's largest airline. The Justice Department and 6 states say that the merger would reduce competition and raise ticket prices. By the way, United Airlines has been fined by the government. The carrier is said to have filed false reports about mishandled bags and for delaying refunds to passengers. The fine, $350,000.
Fighting those pesky bank fees is easier than you may think. New research finds 44% of consumers have had bank fees reversed simply by asking. The most common reversals were overdraft charges, followed by annual fees and return check fees. However, not all banks are quick to hit the brakes on charging customers. Due to the rise in mobile and online banking, PNC and Capital One are trying out a new service that charges you to talk to a teller in person.
On the IPO watch, GE Capital. Its reserves are so deep, if it were a bank, it would be the 5th largest in the country. The Wall Street Journal says that it now may be spun off by its parent company, GE. Potbelly, it's been growing too. The sandwich chain is in 18 states, and it hopes to raise about $75 million by going public. And a spin-off for Xbox. That's the rumor from Bloomberg. The gaming platform is the 4th largest business unit in Microsoft, and it brings in about $7 billion.
SeaWorld attendance is slipping from bad weather or, according to some, blackfish backlash. Attendance dropped 6% in the first half of the year. SeaWorld blames the slowdown on weather troubles in southern states and the timing of the Easter holiday. But others suggest the documentary Blackfish, which involves how orca, sometimes known as killer whales, and blackfish are treated in captivity. SeaWorld told First Business that it denies any direct impact on attendance due to the documentary released earlier this summer.
In Detroit, thousands of stray dogs have animal groups across America concerned. The strays have actually been a problem in the Motor City for decades, but it's gaining attention now following Detroit's bankruptcy filing. Tom McPhee is with the World Animal Awareness Society. He says the problem largely has to do with economics.
A lot of people get dogs, have dogs, are given dogs, buy dogs, and look at them as an item, something to have as opposed to a living being. And so just as people walk away from their houses with all of their material goods left behind, they're leaving their houses with their pets behind too.
His organization is accepting volunteers for later this month. If you'd like more information, you can go to their webpage, wa2s.org.
Baby teeth are going for big bucks these days. Leaving a lost tooth under the pillow now has a rate of return of $3.70. That's up 23% from last year. However, in some cases, the tooth fairy has been known to leave as much as $20 or even $50 per tooth.
Well, let's take a quick gander at the economic calendar. Look for numbers today from ISM Index for August and construction spending for July. And from the earnings calendar, numbers from H&R Block. Still to come, your menu for the rest of the show. $1.7 billion and growing. We're going to take a look at the charts of some of the companies profiting from the sale of e-cigarettes and what sucked all the excitement out of new smartphone releases. And first, the good, the bad, the ugly in new numbers about manufacturing in America. That's next after this In the Know message. Well, good morning on a new season and a new month. And look, we've got some new numbers. These have to do with manufacturing. Later today, the national report from the Institute for Supply Management, that's released. And that comes on the heels of the monthly MNI Chicago report from MNI Indicators. This is a closely watched indicator of U.S. economic activity. And it boils down to one number. And if it's above 50, well, we've got an expanding economy. And it turns out for August, it's 53, up 0.7% from July. Alice Andres France is with MNI. Let's look at the good first, Alice, and that concerns orders.
That's right. We have new orders up 3.3 to 57.2. That was a decent jump for that. We've also got order backlogs up 3.5 to 46.5. And the story here is that in our barometer, the weightings on the new orders is a little bit heavier than the order backlogs. And so new orders is really the story and the thing that carried our barometer forward this month. We are also getting the same type of commentary from the manufacturing side that while new orders continue to come in, it is the order backlogs that are carrying companies across.
Well, for those new orders, they're also paying a little bit more, and you look at that side as well, an indicator of inflation there.
That's right. Our prices paid component was up 1.6 to 65.2. That's the highest since November 2012. It's also the fourth consecutive month of increases, so this is really a big eye catcher there. We're hearing price increases across the board. We're hearing that suppliers are absolutely insistent on passing these prices across. We're hearing it in the corrugated space, chemicals, plastics, education, food, lots of things rising.
I look at the numbers here, and you look at lead times. Tell us what you see there.
Well, we're seeing lead times lengthen out. Back in June, we had lead times really, really short, but we're seeing those extend out a bit, and that is certainly adding to the backlog. And the reason is that production material, the lead times for purchasing production material has lengthened out quite a bit. We are hearing that there's some disruptions in the supply chain, largely linked to transportation, specifically trucking. We're hearing that there's not a whole lot of excess capacity there, a lot of job retirements by the truck drivers. And so if you don't have a lot of capacity in the trucking space, then it's really difficult to get the goods to the factories.
And rail can't compensate in any way for that?
Rail is also experiencing the same type of lack of capacity because of the newfound oil and gas in the West.
Yeah, I see a lot of trains going by my house. They're all those oil tankers. So 53 is where things stand for August. Is there an optimal number we should look for?
Well, you always want to be above 50 to be at expansion. We are about right on target this month. This is about where consensus was. The good news is on the barometer is that we've had 2 back-to-back monthly gains. We haven't had that in 2.5 months, so I kind of take that as a small positive.
All right, Alice, thank you so much. Coming up, it used to be front-page headline news, why new releases of smartphones have become a minor event. And later in Chart Talk, e-cigarette sales, it's not all smoke and mirrors. We'll be right back. few weeks, another couple of new iPhones will be revealed. Remember a few years ago, how each new phone rollout, it sent the world reeling, but now it's, really? New Samsungs are coming out. There was the new Moto X, but releases no longer seem to engender lines around the store excitement. What's the problem here? Phil Rosenthal is a business columnist for the Chicago Tribune. We don't want incremental. It's got to be, it seems, earth-shattering dramatics.
Well, and I wouldn't say there won't be lines. There are always lines. It's sort of a happening, and that's what people, if you're a traditionalist, it's the same reason people line up for certain film
But the
sequels.
larger point here.
But the people behind them in the line isn't going to be there. And part of it is, it's harder to get great all of a sudden, Everybody has sort of caught up to what the iPhone can do and does do. Everybody solved those problems. So, all the products kind of look alike. All the improvements kind of look alike. And, nothing really, the first iPhone kind of blew everybody's socks off. I don't know what can do that now. Probably nothing involving a phone.
It sounds like the consumer market, we're spoiled. We've come to expect that. And we need that if they want us to get off our duffs and buy something.
Well, part of it also is that people are satisfied with what they have. That the improvements have been so great that they've met satisfaction, that you're no longer looking at your phone and saying, I got to get a new one. There's got to be something better here. You look at what they're offering in the new phones, and you say, well, a little more memory, a little nothing that you say, I got to have that. And that's the thing. Part of it is we're satisfied with what we have.
Now, what does that say about the business model behind the phones? Do they need every 6 months some kind of a real reason for people to go out and buy a new one?
I don't know. I think the model is changing, and I think you see it in some of the phone company deals, that they're no longer necessarily locking you up for 2 years, that they're no longer, some companies are encouraging you to, hey, we're going to make it easy for you to switch. Come on in. Please come on in. I think it becomes a different kind of business.
Hard to believe that the iPhone now part of a mature industry.
I know, but that's the thing, everything improves. If everything turns over in 18 months, every 18 months, well, it's now how many cycles in?
Yeah, can't count them.
I can, but I'm not going to.
Phil Rosenthal, thanks so much.
Pleasure to be here.
Meanwhile, what's old is news today. Apple's trade-in tactic is in the midst of expansion. The service, unveiled last week, lets consumers trade in older iPhones toward credit for a newer model. It's not clear yet whether the tactic will pay off, however. Tech analyst Rob Enderle says the new service is a sign of weakness.
One of the reasons they need this is because their phone and market position is weakened so much. Under Steve Jobs, they would have never needed to do this because pretty much everybody was coming back and they were getting new people onto the devices all the time. That clearly isn't the case now. Apple's market share has dropped to a fraction of what it once was, and they are struggling to hold on to customers.
Meanwhile, traders will likely be watching Samsung this week. That company is getting ready to up the ante in the marketplace with a new smartwatch. The Galaxy Gear will be unveiled tomorrow.
Well, puff on this. E-cigarettes. They're going mainstream and big time. We'll talk about some of the companies burning up the sales next in Chart Talk. E-cigarettes, you've probably seen a lot of people smoking them. They are growing like mad. $1.7 billion in sales by the end of this year. James Romelli is with KeenOnTheMarket.com. I know you've not tried one of these, but I bet you've seen a lot of people who have.
Right, this is something that has seen explosive growth, especially in the past 5 years. Now, electronic cigarettes aren't really a new product. They've been around for over a decade, but we've really seen growth in this market over the past 5 years. In 2008, total year sales were around $20 million. Last year, $500 million, and like you said, this year they're projecting well over $1 billion in sales. Now, they're already looking at the use of electronic cigarettes for other methods of delivering medicines and for prescriptions to wean people off of traditional cigarettes. And they haven't approved that yet. The FDA hasn't approved that yet. However, officials in the European Union are taking steps to do that, so that's really not that far off and could be a huge growth opportunity for electronic cigarette makers.
Yeah, even insurance companies don't know what to make of them really as well. Let's talk about some of the charts. Lorillard, Altria, some of the big companies are getting in on this, and you've got hundreds of small players.
Right, so there's a lot of different small cap stocks that produce these electronic cigarettes that I might look at as a pure spec play, as a takeover play or something like that. However, I think that the best play in the space is Lorillard. Now, Altria is getting into the electronic cigarette space. However, they just announced their first electronic cigarette in June to be released sometime in August here. Now, they haven't really snapped up that much market share. Lorillard is an established player in this space. Their brand of electronic cigarette, Blue, has 37% of market share, and I think that they are in the best position to capitalize on further growth in the market. So I would want to play Lorillard in a very long-term view, maybe looking at a deep in-the-money call in January around the 35 strike for around $8.50. My break-even would be $1 higher from where the stock is trading right now. It's going to give me a lot of time for this to play out, and it's going to behave just like the stock.
All right, James, a lot of people betting this isn't going to be a novelty or a fad. It's going to have some traction. Thanks so much.
Thank you.
And that's our show for today. Now, tomorrow, Millionaire State of Mind will reveal the money secrets of the world's wealthiest people. That's next time. From all of us here on First Business, I'm Bill Mueller. Have a great day.